So we're headed into the back half of the year, and I get folks that are asking, saying, "Hey, whereabouts are we in the cycle in terms of positive months versus negative months, or not even negative months, but the underperforming months in comparison to everything else that happens in the year?" Generally speaking, September is the worst month of the year when you go back, over the last 70 odd years. And it makes sense if you go back to the great financial crisis. Things started to actually unfold in September. Even some of the other periods, as people come back out of summer, things tend to get a little bit stagnant as companies get back into the swing of things. Corporate earnings come out, economic data come out. But generally speaking, September, October, November, December are generally some of the strongest months of the year. And it makes sense. Everybody is humming along. Generally, when we actually get some hiccups in the markets, it's kind of early in fall. And so people are saying, well, what do we think is going to happen this year? It's hard to predict, but we're cautiously optimistic. And it's not just because of a chart like this, but because of what the economic data is telling us. We anticipate rate cuts to occur between now and the end of the year, both in the US, likely more aggressively than here in Canada, which has been in a rate cutting environment now for the last probably 12 to 18 months. We also think corporate earnings season is pretty good. Coming out of Q2, almost 80% of companies that reported beat on expectations and earnings, which is higher than their average in general. So we actually believe that will continue as we go throughout this year and early into next year. There are a few things that we need to be mindful of. Obviously, U.S. job data has been weakening. Unemployment rate is trickling up. But we believe the U.S. Fed, they're motivated. They're motivated to get the economy on good footing. If they do cut as we anticipate them to cut, money will get cheaper. We may start to see some share buybacks and so on. And then the last piece of the equation, when we look at it, where we are in terms of kind of phases in the economy over the long run, we're going into this innovative cycle, or not going into it, but we've been in it now for the last probably few years, where we're seeing a shift to AI, robotics, so growth-oriented or tech-oriented type changes that are just altering how we live our day-to-day lives. And so when you look at some of those companies, some of the biggest ones reside in the US, companies like Meta, Microsoft, and Amazon, and Tesla, and so on. So we believe with rates that are going to come down and money being less expensive and monetary policy easing, we would anticipate things that continue to point in the right direction, although cautiously optimistic. We still need to manage a little bit of the risk, but looking forward, we think things could be in pretty good shape. If you're curious how this might impact you, or what changes you might be needing to make in your portfolio, let's chat 10 to 15 minutes. Happy to give you a quick assessment and point you in the right direction. I look forward to speaking. Have a great day.